Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome Daniel Roberts back to the program. He's the co-founder and co-CEO of IREN. They just came out with their Q2 earnings, and we couldn't be more excited to go through the results in today's episode. Before we get into it, take a second, hit the like button, you guys. Big help to myself and the channel, specifically in getting this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of IREN, what you thought about their quarterly results, and your outlook for the remainder of 2025. And with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got Daniel Roberts, the co-founder, co-CEO of IREN, back on the program. It's been a few quarters since we spoke with Dan directly. They just came out with Q2 earnings last night. Anthony and I just finished up listening to the earnings call and could not be more excited for the discussion. So Dan, great to see you. Thanks for making time.
Thanks for having me back.
You bet. Hey, one of the first questions I wanted to ask, this line you gave us in 2024 stuck with Anthony and I throughout the year. We were talking about your growth potential in terms of the Bitcoin mining, and you said, boys, all we need to do is plug in these machines. Fast forward now to the end of the year, IREN has put up phenomenal amount of growth in terms of data center capacity, exahash capacity, Bitcoin mining, fleet efficiency. So the first question I wanted to ask before we get into earnings, how is this level of growth even possible, Dan? You guys are putting up more infrastructure, more machines than anyone else in the industry, and seemingly have it now just on rinse and repeat.
Oh, yeah, I appreciate the compliment. I think it's a combination of a few things. Like, it comes from a founder-led business, if I'm honest. Like, Will and I, this is our life, and we're not corporate CEOs here, and there's no bureaucracy, there's no politics. It's just cutting straight through to what the right answer is. And we're wrong all the time. But it's the ability to recognize mistakes, pivot, and improve. And I think that process, that iterative process, has allowed us just to cut a lot of time and cost out of these processes and get to the right answers quicker. And it's a mix of having the right people, processes, strategy. In Childress, we've got 500 people on site every day helping to deliver on this. And look, it took a while to establish the right cadence, but you just keep persevering, you keep tweaking, you keep iterating. And we're now at the point where we're producing 50 megawatts of data centers a month. And it's largely copy paste. It's just do the first lot, onto the next lot, rinse and repeat. So looking forward to Sweetwater down the road, where basically the same processes, a lot of the same people will hopefully be able to help there.
Yeah, it was a great earnings call last night, and you covered a lot of information on there, and we encourage people to to go back and re-listen to some of the points on there. We'll cover some of the stuff today, maybe take some of those questions in a different perspective. But I was really impressed. I mean, I said to Bryce before the podcast, we did our own podcast today. We covered a little bit of the earnings on there, and we talked about this last sort of 3.5 years since your IPO, and the fact that how the change in sort of retail investors, the popularity, we go back to 2021, it was Hive, it was Bitfarms, it was Marathon, it was Riot. Those were the names that people were talking about. But in 2023, we saw this change then. We saw CleanSpark come through, we saw you guys come through, and 2024 really established you two as probably the two most popular from the retail perspective, and there's a lot of retail perspective out there in the land of X and all the other social media platforms. But you two really sort of like set the tone for the industry, and both of you had massive growth strategies to achieve last year, and you both achieved those. Now, it's easy to say when you talk through updates about energy pricing, price per Bitcoin. But I managed to go through the numbers this morning, and it looks like you did exactly what you were saying through all these updates. Because it's never always the case. We always hear, snippets of information come out, and then we go through earnings updates from mining companies, and it never sort of stacks up as the results that come out. But I had time to go through yours today and do some comparisons. And it was pretty amazing, the gross margin. We looked at Bitcoin mining 74-75% gross margin in the mining business there, and producing a Bitcoin for 40,000, including all your sort of cash costs, so not just energy, but all your operating costs as well. And comparing that to sort of the other peer mine that's released their results last week was CleanSpark, and they were sort of like in the 54-55,000. So it gives you a 14,000 per Bitcoin advantage over your closest rival effectively in the market at the moment. So from your perspective, what else can you tell us about last night? Very briefly, some of the key things that you talked through financially from the earnings update.
Yeah, and I think that cost per Bitcoin is based on a far lower average hash rate for last quarter, recognizing we only hit 31 at the end of the year. So I would expect to see that significantly improve again for this quarter. Oh, look, it's kind of you to say it has been an interesting ride over the last 3 years, but as we say in Australia, head down, bum up. Just focus on the process, make good decisions, focus on the fundamentals. And to be frank, like public markets has been an eye-opener. Like I've never had ambitions to be the CEO of a public company. I'm not sure I still do, because it's a very interesting environment where you've got a lot of different factors at play. But at its heart, Will and I have got really large stakes in this business. It's our baby. We started it. We're focused on getting the right outcome over the long term. And obviously, when you start to deliver, the market's starting to recognize that. And we do appreciate all the support, particularly of retail over the last few years.
Yeah. And you're quite right. We also discussed earlier, Bryce and myself on the podcast, the fact that as we go into this quarter, and we're only literally, just over 6 weeks from the end of your quarter three, the first quarter of 2025.
It never ends.
It never ends, but actually, you're right. The fact that you got to that hash rate and you're now operating at 15 joules a terahash, because if you look at I think, if I remember right from your presentation last night, your average hash rate for the quarter was about 22, and you're growing towards 15, so you weren't necessarily that fleet efficient for the whole period. Now you're at 15, and you've got the 31 exahash. So you're going to be producing more Bitcoin in this quarter, irrespective of where the difficulty goes. You'd have to significantly increase to bring the amount of Bitcoin down in this quarter than you did in the last quarter. So you can have more revenue, more margin, and hopefully your operating cost, which I tend to class as generally fixed, really, to a certain extent, unless companies are significantly growing quicker. What would that be sort of like your take on the next quarter?
Yeah, I think we've previously guided towards around $30,000 as an all-in cost.
Yeah.
So 40,000 at the 22, if that's the right number you quoted, I would expect that to trend down significantly this quarter, because as you say, we've got 50% more revenue, but the costs haven't scaled.
Spread over more. Yeah.
So corporate overheads, this is the whole operating leverage of scale, and we've hit it now. The big ones are like REX. So I think we're still the only Bitcoin miner that actually uses renewable energy, because no one else buys the renewable energy certificates. And that's something we'll continue to do, because we believe it's the right thing. You can't say you're using renewables if you don't have the certificates. And then it's things like property taxes, insurance, etc., that all just scale linear with the site. But obviously the people, we don't need a third CEO, clearly, and you don't need more CFOs. Yes, we're investing in growth, development, the AI side of the business, but those costs are relatively small in the context of the revenue line that we're now generating and will be generating, particularly at 50 exahash.
I mean, looking at market capitalization this morning, I mean, there was literally 100 million between you and CleanSpark. So obviously the market, is starting to give more credibility to you guys. We've seen that the share price and the market capitalization grow quite nicely over this last sort of 8-9 months, and getting closer and closer to the share price reaching in a high. So, do you think any of the sort of like the start of the HPC starting to get built in, or do you think once maybe announcements in the future for any HPC at any of the sites will add to that?
It's hard to know, isn't it? And I don't track other companies' market caps that closely day to day, but that's an interesting point. Look, I just know, based on conversations with our investors, what they're thinking about. Look, we've tried to be pretty realistic about AI. Yes, we've got our AI cloud business, which has been growing, co-located alongside the Bitcoin mining machines in the same data centers. Yes, we've now announced Horizon One, which I'm sure we'll get to, the 75 megawatt liquid cooled. Yes, we're talking about strategy to unlock a potential 2 gigawatt data center hub in West Texas. How much is priced in? It's really hard to say. At the end of the day, we'll just keep being realistic about the process we're going through and where we want to get to. But a lot of these things, Bitcoin mining, we can control. I can give you a target. We're controlling our own destiny. Yes, there's supply chains that need to be managed, and we've done a pretty good job of that previously. But when you're dealing with third parties and relying on commercial agreements with customers, I actually feel it's a bit dangerous to try and preempt certain dates and terms because you're cutting across a natural negotiating dynamic with these counterparties.
Yeah. Well, just staying on mining, I mean, I noticed you'd recently increased your hash rate to 57, but announced yesterday you've pulled that back now to 52 with obviously your target by the end of June is to get to 50. Is the extra two just filling capacity that you had available at Childress, maybe swapping machines over for more efficient miners, or just increasing with the megawatts available?
Yeah, I hate giving up hash rate. So going down from 57 to 52 hurt a bit. But when you're swapping it for 75 megawatts of next generation liquid cooled data center, it kind of feels pretty good. Basically, that's utilizing the 25 megawatts in block 6. So 75 of that 100 megawatts will go towards Horizon 1, and the 25 megawatts will allow us to get approximately 2 more exahash.
Yeah. Yeah, I'd just like to say as well, with regards to the monthly update, where we get a vast amount of information. I mean, remember when we spoke over 3 years ago when we started this space together, covering, doing the analysis month by month, and it was literally a few sentences. And now it's like you've got to spend 15, 20 minutes just reading to go through all the information that's packed in there. I like the new look of your update. The photograph of Childress looks something. It doesn't look like a Bitcoin mining site to me. It looks something far more superior than that. And I noticed you mentioned last night we don't build things in the desert in tin cans or whatever like that. So it's great to get that information. I always tell the retail market, manage your expectations because we've noticed a couple of miners this month have stopped producing monthly updates. And we're grateful that we've had this now for quite a few years, and we're hoping obviously it continues in the Bitcoin mining space, and also you very much include everything about your HPC setup as well. So those people that have got a thirst for information and feel that they've fully met their requirements when they finished your update. So again, it's great to see the new look of the update. Really impressed with the photographs, and hopefully that will continue.
Yeah, absolutely. I mean, we've got nothing to hide, so the more we can show, the better. And like we've always viewed this as a bit of an educational exercise as well. We're on a journey together in new sectors, whether it's Bitcoin mining, which is starting to mature, whether it's AI. The more we can share, the more we can help investors understand how we're seeing the world and what we're doing. I think that's just going to help us over time.
Phenomenal. Yeah. Now we're going to get into the HPC AI component of the discussion next, which I think a lot of people are excited about. One final question I had from the earnings, you guys cited an energy cost in the $21,000, I think $400 range. Can that be assumed that will continue at that level or perhaps decrease as additional power generation comes on? I know you just mentioned your all-in cost per Bitcoin, you were guiding towards 30,000. So I would imagine the power component of that would at least stay consistent in 2025, but any commentary you can provide there?
Yeah, it's a function of a few things, right? So we've got a power cost of 3 cents a kilowatt hour at Childress since moving to spot pricing. Will it stay there? Will it be slightly higher? Will it be slightly lower? There's some level of risk there. The fleet efficiency obviously won't change materially. We're at the 15 joules per terahash, although there will be some natural improvement to account for the step up from the average hash rate of 22 to 31 at quarter end. What does the global hash rate do? Does difficulty increase over time? So there's a few moving parts there, but directionally, I think it's likely to be close to that mark.
Great. Now, moving into the next component here, the construction, the client updates on the HPC side of things. We noticed last night, and you just made reference to this at Childress, you've decided to reallocate some of those megawatts into the Horizon 1 project. So 75 megawatts that were formerly or potentially going towards Bitcoin. We've talked to a lot of companies in the space, obviously, Dan, and a lot of them, similar to what you said on the call last night, are using kind of a pilot or trial approach to HPC AI. However, many of the other people doing this are on a much smaller scale. So our question was, this 75 megawatts, it seems like a lot to be allocated to a pilot project or a test project. How can you be so sure of this without having a customer in place, or how can you be sure that a customer will be available for this service?
Yeah, I think there's potentially a big difference here. We've got over 500 megawatts of test projects. Like we've got that in operating data centers. And in those data centers, we're already operating an AI cloud service, servicing AI startups, scale-ups, increasing enterprise demand. So this is just a further evolution of that trajectory that we're on. And yes, we're using a slightly different cooling system with liquid and enhancing some redundancy with generators, etc. But it's not a material change from a business that was set up on the foundation of pursuing AI. And we often forget that. And we had that slide from February 2020 in our earnings deck. Like this was always anticipated. It was build out a data center platform, bootstrap it with Bitcoin mining, be ready to leverage into higher, better use cases if they emerge over the time. And we quoted AI, we quoted machine learning. So yes, it's playing out. We've got the systems, processes, the basic tenets of a data center there for multi-tenant capability. So to continuing to evolve that makes complete sense. So I think the real question, therefore, is not on the technical side. I feel pretty comfortable there. It's more, is there a market for this? And can we sell the capacity? And obviously there's a risk. We don't have a customer now. So by definition, there's a risk that we don't get one. But I think when you step back and you see the scarcity of liquid cooled data center capacity in the market, all the Blackwells starting to ship, particularly in the second half of this year, and the inability of the real world to scale, traditional data center operators, other companies, it's not easy to pull together 75 megawatts of liquid cooled data center capacity like that. And in relative terms, our ability to do it this calendar year seems to us to be a real competitive advantage.
In terms of allocating that amount of power to Horizon 1, I mean, you just mentioned the fact that you're already operating GPUs in the same facilities as probably S21 Pro miners. Is there an opportunity, should things not turn out from a HPC perspective, to actually put S21s in that facility, or once you've made the decision now, you're forced with that cooling system, forced to using it for HPC?
Oh, to be frank, I think it's almost unfathomable that it would come to that. But yes, like the guys would find a way, and maybe it'd be the hydro models, for example. But also is the case that these data centers, the base build, the power shells, if you like, in which we operate Bitcoin mining, are only $650,000 a megawatt. So you could almost build a separate building next door and temporarily run miners, and they pay off that building pretty quickly.
Very quickly, yeah. In terms of, in terms of the size of it, I mean, I'm assuming you're looking for a host client to come in with their GPUs, because the cost of you filling that would be significant. I mean, it's great that, companies can do it on a small scale. It's expensive. You've already mentioned, in terms of how many millions per megawatt. But when you're filling 50 megawatts with GPUs, that's a serious amount of capital required. And you're also looking at Sweetwater as well, 1 and 2, to start developing in sort of like conjunction with what you're doing at the Childress site. So would that be fair to say?
Yeah, it absolutely is. I think there's a slight nuance here. At the end of the day, capital is next to unlimited if you've got the right business, right line, the right revenue line. So I won't rule anything out. For example, someone comes along signs a 3-4 year long-term contract for GPUs from a creditworthy counterparty, all of a sudden you're going to be able to secure a lot of GPU financing against that, i.e. debt capital, because the contract is there, it's bankable. So I wouldn't rule that out. Absolutely, we should stay flexible and open to those scenarios, but I am agreeing with you in the sense of the base case is just simple co-location. Yeah. Bring your own GPUs and plug them into our facility.
Yeah. I mean, we've only seen at the moment, I think, the two big contracts, one awarded with Core Scientific and TeraWulf announced something more recently on a similar scale to what you've got at Horizon, actually. And we're hearing, obviously, there's going to be other announcements imminent. The fact that I think something's been released with regards to Hut 8, even prior to the new year, and that's not been formally announced yet. But everything but announcement, it seems to be happening. This sort of backs up what you're saying about there's a requirement for power out there, and those companies who've got access to power and access to the fibre and the water that's required for HPC sit themselves in a very good position.
I think that's right, particularly coming into the new year. I mean, there's a different type of energy and intensity post 1 January, particularly from these hyperscalers where I don't know what it is. Maybe it's people realizing that this power is actually scarce. Maybe it's people realizing that they are more short on power and DC capacity than what they thought late last year. Maybe it's just people re-energized after a long 2024 and coming back and ready to actually do work. But however you want to justify it, there's definitely an energy in the sector, and that doesn't surprise me to hear that other companies are also getting traction, and that's fantastic.
Do you think it sounds like, is there enough? Do you feel you're in competition with other miners, or do you think there's actually so much out there that we're going to manage our own position going forward? I mean, 8 months ago, we were sat in Corsicana, Bryce and myself, and then the management team wouldn't take any questions about HPC. Now there's like a 180-degree turnaround. They're looking like they're going to use Corsicana like you're using Horizon 1 at Childress and use that 600 megawatts on a site that's been effectively developed and just needs the buildings put up now to start delivering it. Are they competitors, or is it a case of actually there's so much in the space? We'll do our plan with what we've got at Sweetwater 1 and 2. We've got Horizon, can be done in fairly quick time because of the fact you've already sort of like done a lot of work at Childress.
Oh, Anthony, if you look at that earnings presentation from yesterday, we've got a slide in there showing a 36 gigawatt shortfall in energy over the next 3 years. We've only got 2.3. I feel a bit of FOMO, like we're not doing enough. It's not enough. So you kind of look around, there's going to be a lot of winners. There's going to be a lot of opportunity for different people. We'll keep running our race. I feel like we do have somewhat of a competitive advantage with our ability to execute, the people, the processes internally, our track record of execution. But at the end of the day, like, it's a big market. There's going to be lots of winners, and that's great.
Final question on the Sweetwater is, you've got two sort of sites that you can develop. Would ever an option be to utilize one of those sites to sell and grow and use that funding to grow the main site then? Or is that actually it's not even an option? We know the future, we know there's growth, and we can attract more return on investment by developing both of those sites.
Oh, it's always an option. We've received multiple offers to buy out that site at many, many times the hard development costs that we've put into it. So I'll never rule it out, but equally, the pathway to shareholder value we see is developing that site internally. Like, the competitive advantage we've got is we've got the power and land, and we've got the capability and expertise to build it out. And that feels like the best way to drive shareholder returns, rather than a bit of fast food, cash in the door, and then you're out looking for more power to monetize. So I won't rule it out, but equally, I think what we're building in Sweetwater has the potential to be quite special, particularly with the addition of Sweetwater 2, the creation of a 2 gigawatt data center hub in West Texas, where there's a number of hyperscalers looking for 1 gigawatt plus clusters. It does feel like there could be a lot of potential value there.
That's what I was going to say. There's not many 2 gigawatt facilities or campuses around the world, let alone in the United States. Now, you mentioned last night or clarified, we were going to ask about the Morgan Stanley update. You clarified last night that you guys went ahead and ended that contract or terminated from the IREN side. Reading between the lines, it sounds like control of the facility may or may not have been the reason for that. Can you talk to us a little bit about whatever you're able to share there, maybe some of the friction, and now where IREN feels like the real value is in terms of the single site operator or single site client and retaining control of these facilities?
Yeah, Bryce, never any friction, Bryce. It's all good.
Always.
They were engaged to sell the site. That was the mandate. We received offers, didn't like the offers. We've decided to go our separate ways and pursue other ways to monetize the site. It's as pretty simple as that.
Now, what benefits does a single client offer? This is similar to what we saw with Core. You've obviously got some massive facilities when you start talking about Sweetwater, just very rare, very hard to find. What does that offer a hyperscaler, or what benefits does that provide IREN?
To be determined. I think we're all working that out. I mean, people have commented on the capabilities of larger clusters as compared to two smaller clusters. I've heard an analogy saying if you take two monkey brains, put them side by side, it might have the same mass as a human brain, but the fact that it's all in one spot delivers exponential more capability. Now, whether that's right or wrong, I can understand the logic of having all these GPUs talking to each other in close proximity and low latency and the benefits that that may pose. But the reality is there's very low opportunity cost. We've got 750 megawatts at Childress for potential multi-tenancy co-location before we even need to think about chipping into Sweetwater and compromising the ability to do a single site, single tenant deal. So we've got this great discovery phase ahead where we can prosecute single site opportunities for 1.4, maybe 2 gigawatts without compromising the AI HPC trajectory and building out a multi-tenant co-location business. And it may be the case that we're sitting here in 18 months and we've replaced the whole of Childress with liquid cooled 200 kilowatt rack density under co-location contracts, and our Bitcoin mining is at Sweetwater. And strategically, that makes a ton of sense, because if someone still comes in and wants the whole site, all of a sudden you're just unplugging and selling a few ASICs rather than having to unscramble an egg where you've got all these different tenants on site under different contracts, and you've got a potential purchaser of that capacity or contract for that capacity where they want all of it and you can't necessarily deliver it.
Yeah. It just, I mean, the sheer size. I did a quick check today on like listing the top 10 biggest data centers in the world, and in 10th place was the Meta data center in Bowden, which I visited last year, going to see High's facilities, and that was number 150 megawatts. So what you've got at Sweetwater would put you firmly in the top 2 or 3 of all the data centers in the world if you could activate, that power that you could generate at that one site. Does the timeline for development, fit nicely with the conversations that you're having with potential clients to move into that?
Yeah, it does. And we always joked, and we have for many years, it's people have very short time preferences. It's just the way the world's constructed these days. And we always joke that as soon as 31 December ticked over and it was now 2025, all of a sudden early 2026 power would have value. But before that, when you look at the calendar and it said 2024, everyone's going to mentally dismiss it. And it's absolutely playing out that way. All of a sudden, 2026 power is the focus, and that's what we need, and that would be great. And maybe we'll even take 2027 power. So I think it's all correlated to that new energy that we're seeing in the space that I mentioned earlier, post 1 January as well.
Hey, one additional question here. You kind of hinted at it earlier, but you use the word bootstrap, ability to essentially leverage Bitcoin mining machines to fill up capacity if and where needed, even the opportunity to potentially move those into Sweetwater while you wait for that single client. When would you have to start making decisions on this? We understand there's long lead times. We understand you're energizing the first 1.4 gigawatts in April of next year. I guess, and I'm not sure if you're going to be able to answer, when is kind of the latest date we could expect to hear a client announcement from IREN?
4 years from now, because there's never a latest date in the sense that we can always build out these buildings, whether the tenant wants to use those buildings or whether we develop something separately. It's just a whole spectrum. So if I sit here today, what are the investment decisions we need to make in Sweetwater? Well, it's energize and procure a 1.4 gigawatt bulk substation. Well, tick, that opens up both pathways. Do we want lower voltage transformers? Yep. Do we want to do civil works? Yep. Do we want to build roads? Yep. Do we want office infrastructure? Yep. Do we want to start doing footings and concrete footings and start procuring steel and fans? Well, yeah, because the option value is so high in that. And ultimately, if we did a deal where that wouldn't be applicable to a single site deal, they're just hard assets that you could ultimately resell or redeploy at a different site. So there's a whole spectrum of optionality over the coming 12 months, which is probably a better answer to your question, where we will continue to invest in Sweetwater. A lot of that investment is path agnostic as to the final use case of that site. And as we get closer, absolutely, you would consider the base case to be to build out our PowerShell data centers, bootstrap it with Bitcoin mining, and then be ready to do a single site tenant deal if it makes sense at that point.
With what you've seen happen over the last sort of 12 months in terms of the development of HPC in the mining space, miners starting to now look to utilize some of their capacity power towards this business model. Talking past 2025, I mean, we know you've got your target of 52 exahash. Does it mean that with the demand of HPC, you see things, more focused towards that, or do you still see a long-term growth in Bitcoin mining for IREN?
Yeah, look, I don't want to downplay Bitcoin mining, but we do it in our sleep. Like it's cookie cutter. You punch out 50 megawatts a month. We could probably scale that up faster if we wanted to. It's just risk and more labor, more people, more project management. Like there's not a lot of focus on that because we know we can do it. We know we can just continue building out into that capacity, which we've shown over the last couple of years. So the real opportunity is to say, well, the business is underwritten by Bitcoin, and what better asset to underwrite it? Like I'm super pumped. But if something happens to come that's a higher value use case and can deliver additional value for shareholders, let's do it. So therefore, our energy is all spent on, is there something better? Can we sign a long-term contract with a hyperscaler that's going to deliver outsized shareholder returns that can effectively beat the returns on Bitcoin mining? And that's almost the benchmark and the lens we look at it through.
Now, funny hearing you say that, Dan, the 50 megawatts a month, you just continue to churn out like it's no big deal. But for reference, you guys, there are very few companies in the world that could do that. And you even mentioned in some of your meetings with the hyperscalers, they're quite taken back at the pace you guys are able to build out. So I just wanted to throw that in there. For IREN, it may be something they can do in their sleep, but for the rest of the world, it seems to be a fairly difficult task.
Doing it in sleep is probably downplaying the effort of many people internally. It's more the processes, the strategies in place. We're able to do it, and Will and my time is spent more on the AI side, just given the strength of the organization on Bitcoin mining.
Now, we know that what your thoughts are on buying Bitcoin, because obviously you can produce it now at a far lower cost than that. But we've asked the question probably quite a few times when you come on the podcast previously, and you've never sort of like said a standoff no. But is there a point in time now and you're thinking, actually, we've seen a switch in the miners in this last sort of 6 months. There's only a couple of miners now that are sort of selling Bitcoin on a daily basis. And even the likes now, of course, Scientific and BitDeer have started to hodl some of their production. Is there a point where you think IREN will start maybe holding some of its production at that low cost of maybe $30,000 a Bitcoin, as we see the Bitcoin price potentially go through this bull cycle in 2025?
Yeah, and look, I think there's a way to position the language as well. When you say selling your production, let's acknowledge that almost every company in this space is raising capital because of the growth prospects. What you're effectively doing is selling shares to buy Bitcoin when you look through it. Because if you hold the Bitcoin, you need to sell more shares to fund CapEx. All of that's fungible, right? So the net result of holding Bitcoin is you need more money, you need to sell more shares, you need to dilute your shareholders to hold Bitcoin on balance sheet. And when I look at it through that lens, I go, oh, I'd love to own some Bitcoin. It's one of the greatest assets, if not the greatest asset on the planet, and it's probably going to continue to outperform. But am I comfortable selling shares and using our ATM just to buy Bitcoin as compared to pursuing this broader strategy, which gives exposure to Bitcoin via our Bitcoin mining as well as AI and allow our investors to retain a greater proportion of the issued capital in our company? I keep leaning towards the latter.
I'm not referring to buying Bitcoin. I'm referring to the fact now that you're and you were a profitable miner in this last quarter. Taking all your costs into consideration, even the non-cash costs, you produced 18.9 million of profit, which suggests that you are covering your costs now. The question is will could you start to actually keep some of the production and use the production that you require to cover your costs and sell that amount?
Yeah, so apologies if I wasn't clear, but this is the same thing.
Yeah.
Not selling Bitcoin is the same as buying Bitcoin. The net result is you need to dilute your shareholders to raise capital. Because if you're growing and raising capital and you're not selling your Bitcoin, then you need to dilute your shareholders more for that capital. So the decision to buy is exactly the same decision as to not sell when you're a Bitcoin miner.
Yeah, I suppose. I mean, yeah, it's the growth question, and so it's if we're going to grow, what are the levers available to grow? We can sell Bitcoin, raise debt, sell shares, and you're reducing the amount of shares you're selling by selling your Bitcoin
Exactly.
as that way there. But I had
And
to
I'm
ask
not
the
aware
question
of any
because
other companies. I'm not aware of any other companies in this space that aren't raising capital to grow. So by definition,
yeah.
you can argue that everyone is buying Bitcoin by selling shares into the market. Because if they were selling the Bitcoin, they wouldn't need to dilute the shareholders as much.
That's fair. I see that.
But I mean, as a point in time, so with when HPC is in operation and the revenues, if you're able to achieve any of the revenues in a similar context to what, say, Core Scientific are going to do, and if you're looking at 600 megawatts at Sweetwater, you could argue that's 500 million of profit a year coming through the door. Does that change things in then decision because you're then actually covering everything, in terms of mining, HPC, and growth? That decision could change in the future, I suppose.
Look, never say never, but I think it's also important to distinguish between the objectives of different shareholders. And there's a lot of noise on X and a lot of different opinions, but there's also a view held by institutional investors that are here for the long term, and they may not share that same view around the benefits of holding Bitcoin on balance sheet. So I think you've got to be quite careful around that. And again, it's going to come to a capital allocation decision at that point. Do we buy Bitcoin or do we distribute some of those profits back to investors and allow them to hold Bitcoin on their behalf? I mean, holding Bitcoin comes with other issues. What exchange do you use? Is it your Bitcoin, not your keys, not your coins? Do you need to insure them? And again, it's just another proxy Bitcoin exposure for the underlying investor where they're not holding that Bitcoin direct. And that's the antithesis of what Bitcoin's about. So it doesn't sit 100% right with me. I don't want to rule it out because I love the idea of owning more Bitcoin, but it's a really tricky one to get your head around.
Yeah, there is some counterparty risk. And I realize we're digging here, Dan. I remember on the call last night, one of the questions you said, how long is a piece of string? And it feels like we're asking some of the same where we're going a little hypothetical, but we love to hear this foresight and the potential strategy as it evolves with IREN. One other topic that came up last night, I think your response was overwhelmingly bullish for the industry, but Stargate, obviously a big investment standpoint from the Trump administration, should be great for the industry. industry. Deepseek initially was viewed negatively. However, as you mentioned last night, Wikipedia Jevons paradox, I don't think has been so hot in the last 2 months. It seems that's actually quite bullish for the industry now that people have understood the relationship between demand and cost. Can you give us your thoughts on those two kind of macro changes, being Stargate and this DeepSeek news?
Yeah, look, I think Stargate's indicative of where the whole industry is, which is this pursuit of large gigawatt scale clusters as people try to scale up their AI capability. And I think that the overlay with DeepSeek is that there's competition. It was interesting seeing the fallout from DeepSeek and everyone saying, oh, far more energy efficient, capex efficient model. Maybe this is the path forward. And you kind of step back and you look at these trillion-dollar hyperscalers who, in their different ways are all but saying that this AI risk/opportunity is semi-existential for their businesses. And you sit there in their shoes, they see a competitor that's more efficient come out. Are they all of a sudden going to say, oh, hang on, the pathway to AI supremacy is just get more efficient and stop investing? Or are they going to say, oh, we need to double down now. We need to go into efficiency. We need to double down on brute force. I'm not taking this risk, but we need to go harder. And my mind is more biased towards the latter. And if you look at the end use cases for AI and think about the inference side of things, so what I've just referred to is probably more about the training and winning on that front. But on the inference side, Jevons paradox is the classic example, and we were writing about it last year in reference to the Industrial Revolution, the use of coal, and how the steam engine just unlocked a much more efficient use of this commodity that led to an explosion in demand. And you sit there and it's intuitive. If the cost of AI trends towards zero, are we going to use more or less of it as society? We're going to use heaps more because the opportunity is just enormous.
Yeah, absolutely. Just one question on the recent update from Cipher Mining. They received a 50 million investment from SoftBank. Are you having any sort of calls with potential financial institutions for investment into what you're doing? Is this going to be the norm now in the market for these potentially large HPC providers?
Potentially. I mean, we're talking to all the parties you would expect to. The conversations are more focused on the revenue line for us rather than the equity line. I don't feel the need to announce a specific strategic investor for the sake of announcing a specific strategic investor. But if there's a good reason to do, and I'm sure there are with other examples in the space where there's something to do with catalyzing a transaction or an opportunity that benefits both parties, then yeah, absolutely, we'll continue to have those types of conversations.
Hey, this has been really good. I wanted to give you a few minutes here, Dan, just to maybe cover anything we haven't spent time on. Give us an outlook into upcoming catalysts and what's in store for the remainder of 2025 here.
Yeah, sure, Bryce. Good to chat as always. Look, I think we're just excited about where we're at. We've now got industry-leading Bitcoin mining operations, both in terms of size and low cost, and the free cash flow we're generating from that is fantastic in terms of supporting the overall growth ambitions of the business. Hopefully, this conversation's shone a bit more of a light on Horizon 1, our 75 megawatt liquid-cooled AI data center being commissioned later this year. We're super excited about the prospect of a 2 gigawatt data center hub in West Texas, around Sweetwater, Abilene area. And we'll continue to try and develop additional greenfield opportunities. It is much harder, but we're trying harder. And in some ways, the harder it is, the better it places our existing power and land portfolio in a funny way. But we'll just keep doing what we're doing. As I said earlier, in Australia, we just say head down, bum up, and keep focusing on the right process. The results will take care of themselves.
There you go. Head down, bum up. Well, you know where to find us. We're looking forward to continuing to providing updates as these catalysts continue to come to fruition. If you have any additional questions that we weren't able to get to for Dan and the rest of the team at IREN, feel free to leave them in the comments section below. Dan, I'll be sure to put all the slides up on screen so viewers can follow along. Make sure to subscribe, hit the like button. We'll see you back here tomorrow.